Everyone's watching stocks, some watches gold, but the metal that actually can save your portfolio in the next crash? Most investors completely ignore it. I'm talking about copper. So why is copper so important, and how could ignoring it cost you when the next downturn hits? Hi, my name is Ace. I've built a 400k plus portfolio in just under 5 years in my early 20s by following Buffett's principles and watching long-term cycles like the 18-year real estate cycles. One of the biggest signals I track is copper, and here's why most investors are missing out. Now, when I first started investing, the only thing that I thought was important was stock prices and maybe the Fed's interest rates. Copper, I didn't even look at it. But then I noticed a pattern. In most major slowdowns, copper prices go into the same recessionary warning territory months beforehand. And that's when I realized ignoring copper wasn't just a blind spot, it was a mistake that could cost me thousands of dollars. So, what's the deal with copper? Now, copper is in everything: cars, housing, electronics, infrastructures. When copper demand falls, it means the economy is quietly cooling down long before the stock market can react. In an economic recession, copper usually pushes into record high prices late in the cycle. That's the warning zone. It tells us the economy is overheating, is pushing, and demand is maxing out, and inflation risks are building. Now let's look back. In 2008, copper hit an all-time high right before the GFC. In 2011, copper spiked again before the euro debt crisis, and in 2022, it broke an all-time high again right before inflation, rates, and everything hikes and the 2022 bear market. That's why economists call it Dr. Copper, the metal with a PhD in economics. But here's the myth. People think copper is like a perfect indicator. It is not. Sometimes copper dips and nothing major happens, like in 2011 to 2016. The mistake is looking at copper alone in isolation. The real power comes when you line it up and combine it with other signals, like the yield curve inversion, slowing earnings, and where we are in the 18-year cycle. Now, Warren Buffett's principles do apply here as well. Don't predict, do prepare. You don't need copper to tell you the exact day of the crash. You use it as one more signal to prepare for the risk and get ready for opportunities to move to the other side. Now, I do break down signals like copper, the cycle, and Buffett's timeless investing principles in my free newsletter, so do check it out in my bio. Do you think copper deserves a spot on your investing checklist, or do you think it's just noise? Drop a comment, I'll be checking.